Hey, this is Jim. It is 11:20 a.m. in San Francisco, California on April the 28th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So we have an interesting setup here. We've tracked well so far today. We lifted into this lift zone, did not move above yesterday's high, but we did track in the lift zone. The velocity is non-existent. And then we did move down into this zone of weakness and then track down into the second zone of weakness. As soon as we pass through the other side of this yellow vertical line, it's about 11:35 a.m. PST. So right now it's 11:21. So we have another, 10, 15 minutes. But as soon as we see price pass through that timestamp, I won't have any other intraday zones of weakness on the board in my work. And I actually have some buy signals triggering. So you guys know that I'm always at a disadvantage on a Friday options expiration because there are a lot of mechanical things that happen in the options chain, a lot of manipulation and very little human emotion unless something triggers and trips through a strike that these guys want to pin to, in which case we can see some FOMO in the case of AMC, and we can see some panic in the case of these guys trying to reposition their options and prevent themselves from losing a lot of money. So we have a shot for that to happen here again in about 10 minutes, starting in about 10 minutes, and then it extends into 6:45 in the morning on Monday, May the 1st. So it's a good opportunity here to not only move up to this 575 Anemoi weekly trigger, but we could move right up through some of these yellow uptrend lines, re-enter this expanding megaphone melt-up fractal, and then move very quickly to a lot of different numbers. We have this pay me later at $6. We've got the pay me later at $6.87, retest up at $7.95, and that monthly trigger at $8.23. So any lifting here this afternoon is positive. It means that price is continuing to track, and it has so far, even though, like I said, this is a fairly non-eventful day so far. But that's what things look like on my side. I want to show you guys, because we had mentioned that 520 retest level that might have been hit today and it hasn't been. I wanted to make sure everyone remembers that the way my behavioral analysis model works. So I'm carrying you guys all the way back to May of 2021 when the model identified the original expanding megaphone melt-up fractal and then tracked really well in predicting both time and price to the upside. The reason I bring it up is because we had a $9.10 retest level that was left behind then, and again, not retested until, a couple of years later, basically. So during 2022 or 2023, I'd have to fast forward to see when we hit that. But anyway, you guys get the point. It took quite a while. So the point is, although there also was a price gap here, so typically our retest levels are hidden, what I call hidden retest levels, meaning there's nothing that you can see based on sort of technical analysis 101 that would make you anticipate a move back down to or up to a certain hidden retest level. In this case, we had that gap. But again, we could take off from here this afternoon and not retest that 520 level. And it would look pretty similar to what happened back in May. So you guys can see this very sharp trajectory on this speed line. You guys can see this uptrend line, which was created obviously from move up, pullback, higher high. So that's a valid uptrend line. You guys can see this dropout right here. That dropout sets us up for an acceleration leg on reentry. And then a expected attack of the speed line. So what happened back in 2021 is you guys can see we had that reentry. It aborted, which created this pay me later level at 1550. Price dropped back under, did what I call a bull crawl, had another high velocity reentry, aborted here and aborted here, which left us with two other pay me later levels to track. You can see as we move forward, you had another dropout, which was really unusual. And then as price moved back up into another reentry, it finally hit that first 1550 pay me later level. By late May, we were accelerating further to the upside, and we tagged both the 2190 and the 2360 pay me later levels. And then you can see I skipped this level here because, again, unless it's an initial move off of a dropout and reentry, I skip messing around with creating any levels there. We know price wants to attack the speed line. So finally, price did attack the speed line on the morning of June the 2nd. And then we had a little bit of a throw over, some thrashing, and then went into the big bad bear market that we headed into. The model was negative during July. And if you guys were with me at the time, you remember I basically told people that, based on my work, the best thing to do would be to just go take a break and enjoy your summer with your family. We were looking for a move all the way back down to $32 into July, which obviously would be, down 50% move back to the downside. The stock ended up shooting right through that $32 level during July, moved down. We had a very bullish setup into August, started up aggressively, and then as we moved sharply up right here, we had some things both by management team and some other things happened that aborted that move. But this was the move where I thought we were going to move back up into the all-time highs. We were up around $48. So, the old all-time high 72 and change. We weren't, that far off, and you guys saw that acceleration. So we were tracking prior to all the games that were played. And then we went into, obviously, a series of lower lows, and then culminating in our August pounce that took us down here into the seller again. So here's the setup that we're tracking right now. We've got multiple expanding megaphone melt-up fractals nesting inside bigger picture fractals. You guys can see off of this pullback low early on the 24th, how steep this trajectory is. And again, we're seeing a little drop out here on the secondary uptrend. This is our primary uptrend within this expanding megaphone melt-up fractal. And then you can see this would have created a pay me later. This would have created a pay me later. So we're not at a loss for upside price targets. And if we can just get some movement to the upside here, things can run away from the shorts in a hurry, especially above that Anemoi weekly trigger at $5.75. So we'll see what happens for the rest of the session today. Again, I'm placing a small bet here on the weeklies, just because risk reward wise, it looks so good. But I never expect things to track great on a Friday options expiration. It's just we're at a huge disadvantage with the mechanical trading versus the emotional portion of the trading. But again, it looked compelling enough for me to take a shot here, in addition to the stuff that I already have on the board. Nothing really to mention as far as the velocity characteristics. We're still working off of this beautiful 11.8 million share green 60-minute price bar right there. And there's nothing that we've seen here in the interim that interrupts that. These were both nice green bar opens here with relatively decent volume, at least spiking above this sort of very low nesting volume that we're seeing here on the 60-minute bar basis. So that's what things look like on my side, you guys. Everything is tracking so far. as far as directionally what we expected. Again, this is the bigger picture setup. We started to track really nicely into the front end of this zone of strength, pulled back, and then here we are again. So you guys can see we could very easily re-enter this expanding megaphone, melt up fractal, and just be off to the races during the next couple weeks here. That's it from my side. Good luck, you guys.